How is everybody doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, I wanted to ask an interesting question. Is deposit insurance reform being done to benefit billionaires? I came across a very interesting opinion piece that I wanted to bring up here. This was from the Epoch Times, and it was basically titled Deposit Insurance for Billionaires. This was written by a gentleman named Stephen Moore, who has written some very good opinion pieces there for the Epoch Times over the last few years. And I think he poses a very interesting question, which we're going to get into in just a second here. But first, I just wanted to give everybody a little bit of background here. So what's going on? So basically, you have a situation where Travis Hill, who is the head of the FDIC, he is one of the people proposing deposit insurance reform. Obviously, we had the banking crisis of 2023 with the failure of Silicon Valley Bank and Signature Bank and Silvergate Bank and First Republic Bank. So out of that, out of the collateral damage, if you will, out of that little mini banking crisis was this whole notion of, well, do we need to reform deposit insurance for consumers? Consumers have deposit insurance up to $250,000. Which is fine, I think, for consumers. I think the big question here is, well, what about businesses? And one of the big questions that came out, particularly from Silicon Valley Bank, was that say you have a business that's got $200 million sitting in the bank, and a big chunk of that is to pay for payroll for the company. I mean, because they got 10,000 employees. What do you do there with that? Like, do you risk messing something up there where not only do they lose all their deposits because of a problem with the bank, but then obviously then it's like a ripple effect, like a domino that just rolls out. So, they lose their money, they can't pay their employees therefore don't get paid, don't have money to buy groceries and pay the mortgage and everything. And it just rolls, right on down the hill. So what can be done to basically reform that? That's kind of the question that's out there at the moment. So I'm just going to read you this real quick. So the FDIC's Hill. So deposit insurance reform could boost confidence. So during a Senate Banking Committee hearing to consider his nomination as FDIC chairman, Hill said reforms like the Main Street Depositor Protection Act, which is Senate Bill 2009-99, could strengthen confidence in community banks while managing systemic risk. His goal is a more moderate, risk-based approach to examinations that improves fraud detection while maintaining robust capital standards. The cumulative impact of regulations highlights the need to assess how overlapping regulations affect community banks' competitiveness and operations. So, this is basically what's at the forefront here with this deposit reform deposit insurance reform, I should say. So let's take a look at this article here. So what is Stephen Moore? What's his kind of take on the conversation here? So he basically says in here, politicians in Washington have the shortest memory. Maybe that's why they so seldom learn from their sometimes catastrophic mistakes. It was less than 20 years ago that the U.S. economy was flattened by the mortgage and banking crisis. Anyone remember that? The experts said that the odds were tiny that the housing market could crash, that the federal housing agencies, Fannie Mae and Freddie Mac, would never need a bailout, that mortgage-backed securities were as good as gold. Then they crashed overnight spectacularly and devastatingly. Banks made riskier and riskier housing loans to subprime borrowers, and the government covered the bets with essentially 100% loan guarantees. The book, The Big Short, famously tells the story of strippers in Las Vegas playing the market and flipping houses by taking out 3 or 4 mortgages. One reason depositors and investors were paying no attention to the big banks' high-risk lending strategy is that everything was guaranteed by you and me. Americans are still rightly infuriated by the taxpayer bailouts in the trillions of dollars. The media has swept it all under the rug as an example of excesses of greed and get-rich-quick capitalism. These factors played a role in the meltdown for sure, but their partner in crime was the government itself, which ensured all the financial Hail Mary passes. One contributing factor to this moral hazard is deposit insurance. Right now, accounts are insured up to $250,000, so most Americans don't have to worry about the soundness of the bank where they store their hard-earned savings. We don't want 1929-style bank runs for sure. So this safety net there for shock absorbing systemic risks makes sense for mom and pop savers and investors. But now there is a proposal to raise taxpayer insured limit to, drumroll please, $10 million. Huh? How many Americans have 10 million to deposit in the bank? Well, let's see. There's Bill Gates, Elon Musk, and Taylor Swift, to name a few in the billionaire class. I'm the last person on earth to join Bernie Sanders in tearing down the rich when they earn it. Supporters in both parties claim this will allow smaller community banks to more easily raise capital for lending and compete with the big five banks. That's a good goal. But we really should call this latest proposal the Billionaire Insurance Act. A recent study from the Cato Institute found that fewer than 1% of deposit accounts exceed $250,000, the level at which FDIC insurance coverage currently ends. So to increase that amount to 10 million will mean taxpayer supported insurance for the deposits of not the top 1%, but the top 0.01% of Americans. But who will be watching over the banks? It's one thing to have the proverbial fox watching the hen house, but with these kinds of limits, no one is watching except the federal regulators who were asleep at the switch in 06, 07, and 08. Think of how much larger the taxpayer losses would have been if this policy were in place 20 years ago. There is another reason why lifting the deposit insurance limits is foolhardy. We don't want to encourage investors to seek safe harbor in risk-free investments. The millionaires and the billionaires are the people we do want to take risks with their fortunes. We want them to discover and seed invest in the next Microsoft or Google or Walmart. Risk taking is a virtue. It's what built this country. But we want investors to make the big bets with their own money, not yours and mine. So, again, I think Stephen Moore, I think he brings up some very valid points in here. Like what, again, fewer than 1% of deposit accounts exceed $250,000. So why do you need this? I do think he misses something though. He misses the point that this isn't about consumers. Like I said, this is more about businesses. In terms of, I think that if the deposit insurance adjustment, for consumers, they might end up adjusting that upwards of maybe from 250 to like 400 or 500,000, something like that, which I think would be very reasonable. But the 10 million, that's really more focused toward businesses, and like I said, I use the example of, what happens if you have a business out there that has, it's keeping $8 million in the bank and they need $4 million for payroll, and, and then the bank goes bust and then they lose all that money. So there is a real question about that in terms of what do we do? How do we handle that? How do we secure that for the business owners? Now, one of the things that I have said or I have put out there is that we have insurance products for basically just about everything. So why not have an insurance product to insure if we're just focusing on businesses, okay, if we feel like the consumer is good, the consumer's okay, we're just focusing on business accounts here. So why can't we just sell business insurance or deposit insurance to businesses? In other words, if you're a big business and you do, you've got, $1 billion a year in annual revenue, and you're keeping, $400 million at the bank, whatever, as it were, why not just offer a product that they can buy their own insurance for it? That way, if the bank does go bust, they're covered. But if the bank goes bust and they didn't feel the need to pay for the insurance, oh well, tough cookies. That's on you. I do think that the limit should be increased. Maybe not to $10 million, maybe to a couple $1,000,000 or something like that, maybe $1 million, $2 million, something like that, for businesses, just for businesses. And I think that should be done. But like I said, then beyond that, I think that they should offer, and again, maybe the FDIC does that. Maybe if the FDIC says, hey, if you're a business owner and you keep more than the $1 million or $2 million in the bank regularly or in multiple accounts, and you want additional coverage, we will offer that additional coverage to you for a price. You have to pay X amount of dollars to insure those deposits, and I think for, depending on the size of the bit, and again, I think the risk probabilities there, get an actuarial in there to look at the risk probabilities. My assumption would be that those risk probabilities on deposit insurance would be very low, meaning that you could offer that insurance at very cheap prices, not much at all. And I think if that's the case, it's like, again, if you just, if you're sitting there and you're going, well, I've got, I keep 50 million, 100 million in the bank, and and that way, you don't have to move your deposits around to, 15 banks just to stay under that 250 threshold. You could just stay at one bank and you could just buy whatever insurance coverage you need, and then there you go, and then you're good. And then if anything happens, they will make good. They'll give you whatever money you had in the bank, and then you can just keep you could take that money, take that check, immediately go over to another bank, open an account, put the money in, and pay your employees, and life continues on. I think that it would probably be a really good strategy. Again, I'm sure there are people out there that would complain and would say like, oh yeah, okay, just another expense, another cost to add to the business or whatever. But I would counter that by saying, well, but you have zero coverage today. Like if you have an account that you're keeping, $10 million in, and you have insurance at 250, you don't have coverage on that. Like the bank goes out of business, you get a check for $250,000. You just lost 9.75 million, just out the door. It's gone. So you have no coverage for that today. I'm just offering what could be a viable alternative for you in the future. So, no doubt this conversation will rage on about deposit insurance, this deposit insurance reform that is going on. I just thought that this, article here was really interesting and really provocative. And I would agree with Stephen in the sense that if they did increase the value of the insurance coverage from 250,000 to 10 million for consumers, yeah, I wouldn't be on board with that. I think that I would agree with his sentiment here. Like, oh, are we basically just doing deposit insurance for billionaires? I would agree with that sentiment that he has in this in kind of the flavor of this article, if you will. But again, I don't believe that to really be the case. I think they're looking at doing they are doing an increase or looking at an increase to the consumer side. But I think the bigger increase is more on the business side. What about small to medium sized businesses, large businesses? How are they going to protect their deposits should a bank go out of business? What do you do in that scenario? So again, I wanted to share this because again, I think this is a very interesting topic. I thought this was a very interesting article that posed a very interesting question, and something that we just need to look out for. Something we need to look out for. I will, of course, continue to monitor any updates on the deposit reform that comes in here on the channel. I will bring those updates to everybody, and we'll see what happens. We'll see how things work out here. Over my guess is that this will all be panned out in probably the next 6 months. So we'll see what happens with it, and then I'll report back and we'll take it from there. So, but that being said, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I thank you so much for listening. I hope you have a great day out there, and I will see everyone again real soon. Thanks a lot.